Hello, everyone. My name is Stephen Stewart. I am the CEO of Power Ore, and we're going to give you a quick update here today. It's been a while since we've had a webinar and with respect to the man, and I'm going to talk about some of the geophysics works that we did just recently and press released it. I don't think the market really fully understands what we've done and what we've discovered on the man, and so I want to talk about that. I want to talk about Cobalt Camp itself, what's happened with in the area of Cobalt, Ontario, Cobalt Gauganda, where the man mine is and many of our competitors are. Talk a little bit about the cobalt market itself. And I'm going to talk about the next steps, what we're going to be doing between now and the end of the year. I think investors can expect to see a lot of activity. It's an interesting time in the industry, that is for sure. So first things first, forward-looking statement, read it on your own. All it tells you is that mining is a risky business, no question about it. So Power Ore, the value proposition here. As you can see in the top line here, Power Ore has got a market cap of about $1.8 million. You net out its cash, that means we're getting about $1 million for the man mine and the McMurtry properties itself. I think that is wildly undervalued. However, you won't find a CEO that won't say that talking his own book, but I think you can see here if you look at our comparables. And the top comparables that I have are First Cobalt and Canada Cobalt Works, as well as Brixton Metals. I'll focus in on Canada Cobalt Works because they're literally across the street from us. They have the same type of former producing mine, high grade, very high grade silver with associated cobalt mineralization. They've got underground infrastructure. We've got underground infrastructure. We've got multiple shafts. We've got a ramp that you can drive right down to. It's flooded. They've deflooded their, dewatered theirs, I should say. So they are a more advanced stage in terms of moving it forward, no question about it. But you can see their market cap there is over $43 million. You net out their cash, it's still close to $43 million. Is their asset worth 43 times ours? I'll leave that for our investors to determine, but I stress we have a very similar type asset in terms of what it was and what it can be. And the same goes for First Cobalt. They've got a larger land position in Cobalt, Ontario. They've diversified away from that camp, being exclusively provided in that camp by buying an asset down in Idaho. but there's fantastic mineralization and assets in the Cobalt camp. And I think you should take a closer look at our competitors and look at ours relative to our market cap, our cash position, shares outstanding. I think we provide a lot of value relative to what's out there if you want exposure to the Cobalt camp and cobalt metals. So that leads me to talk a little about the Cobalt Ontario camp itself. Going back two years ago, there's been an awful lot of activity in that camp. People from all over the world, Australia, China, Japan, the Americans have all flocked here to Cobalt, Ontario. Why have they done so? Because you see cobalt in such high grades here. You see 1%, 2%. We got a grab sample of nearly 6% on the man mine when we just did our assays. Typically, when you get cobalt out of the nickel deposits and the copper deposits, which is where 99% of the world's cobalt come from, you see 0.05% is pretty common. So very, very low, byproduct credits there on most of the cobalt where it comes from. But they come from very, very large deposits, Voisey's Bays, super high tonnage. Same thing with the DRC copper deposits, where 65% of the world's cobalt comes. It comes in high tonnage bulk mining projects. Cobalt Ontario is quite different than that. These are high grade underground deposits. Maybe they can put a pit on them, but the tonnages won't be there. So you get very, very high grades, but low tonnages. So that's what the Ontario Cobalt camp is, and the Gauganda camp as well. Same style of mineralization. They're right next door to each other. But don't let anybody fool you. These are silver mines. That whole camp, it should be called Silver Ontario, not Cobalt Ontario. I think a lot of the hype went into the market there over the last few years as the cobalt price here, and I flip forward just briefly here to show the run up from late 2017 from 25 bucks all the way north almost to 45 bucks in a relatively quick period. But it's cooled back down. I really do think that will climb back up as the cobalt story matures. But that's what really drove the excitement in the camp, because of the unique high-grade mineralization in cobalt. But again, This whole camp, this cobalt district in Ontario is what founded the Canadian mining industry over 100 years ago on silver. And so when they were mining these things, they knew the cobalt was there, but it was the silver that established the camp. I don't want to say they're throwing the cobalt away, but they weren't processing it. They were just leaving them in stockpiles. So there's a big opportunity in the stockpiles in this camp. But nonetheless, it is my opinion that all these mines together, some of them will be mines again, some of them will not be, but they will be silver mines with substantial cobalt credits. And as cobalt continues to become more and more relevant, you'll see the cobalt become more of an issue. But without the silver on these things, they're not economic. That's just my opinion. What's likely to occur in the area? There's probably fragmentation. Too many players in the camp. It needs to be consolidated. There are some larger players there. I suspect there will be one, maybe two or three guys who end up buying all the other assets, and how they'll operate is they'll have a centralized facility because it's all a very tight radius, and they'll have these mines like Canada, what do they call, Silver Castle, like the stuff that the First Cobalt has, like the Man, and these will be sort of satellite deposits where there'll be no mill necessarily on site, but they'll be mining them because you look at the Man mine, you can mine this thing very, very quickly. You start dewatering this thing, you can go into production, the next day. And so there are, the same thing goes with Canada Cobalt's asset and some assets on First Cobalt. So they will all be bought by a single player. Who knows who that player will be? Maybe it's Power, or maybe it's somebody else. But that's what's going to happen in order for this to be a real camp, because I think you need to have a centralized milling facility. So there's an awful lot of value here. The valuations have come off across the board. It's because the hype around cobalt has died down. But at the end of the day, you have to make money moving tons, and I think you can do that when you consider that silver, that the high grade silver nature as well as the cobalt. So that's just my general opinion on Cobalt Ontario. Interesting camp, but still more work to be done. Again, this is just showing you why everything's come off in the cobalt. Quite obvious, it's almost halved in the last 6 months or so, and silver price has certainly been a dog. It's down to in the 14s, but everybody says, or the saying goes, is silver is gold on steroids, and I'm certainly bullish on gold with our position in ore finders, and if you think gold is going to go up, then silver kind of almost has to as well, probably with a higher beta, meaning it'll slingshot higher on a much percentage basis. But anyways, I don't predict metal prices, but I certainly think that the medium to long term fundamentals for all not all commodities, but certainly silver and gold and cobalt look very strong. In the near term, it's impossible to predict, but the medium to long term, very optimistic, and that's why I say it's an interesting time to be in the business, because you can pick up assets for cheap relative to what we think the medium to long term prices will be. So a little bit more about Man. You can see here, it's Northern Ontario. Here's Cobalt Ontario. It's the Highway 11 right there. We're just a little bit west of that in what's called the Gauganda camp, which is really just the same as the Cobalt Ontario camp. Same type of Nipson diabate mineralization. The Man mine's right here, again located off the 560 highway, and we're just across the street from the Canada Cobalt Works mine. And what they're doing, as I said, they've got a $40 or $50 million market cap. Same type of asset, not really much different at all. But that just sort of sets the tone for the camp. And Kirkland Lake's about 130 kilometers north of where we are. This is really mining country, and as I said before, this is where the Canadian mining industry got started. They used to say, Toronto was just a place you went to go and change from the train to rent your car to go up to drive to Cobalt, because that's where all the action was 100 years ago. So what I wanted to do, really the whole impetus of this presentation, is really to describe what we discovered in our geophysics. We press released it a couple of weeks ago, but I don't think most people really understand geophysics. I mean, they're very interpretive, and you have to almost a geophysicist in order to make sense. There are heads or tails of it. So, I call these things pretty pictures. But what you're looking at here is the magnetic survey that we did on the Man mine, and we did it with a drone, which is fantastic new technology. First, it's a whole lot cheaper than helicopters, and second, most importantly, they can fly a lot lower, and so you can get a lot higher resolution. So we got incredibly high magnetic resolution. This has been flown with helicopter magnetics before, but we never ever got to see the resolution that we did right now. So what you're looking at is this red vertical structure here. That's the Nipissing diabase dike, very high in iron. And that's, you know, the reds indicate mag high, so magnetic high areas. And so you can see very well-defined structure. And in previous magnetic works that is available, you can see this red structure, but what you can't see are these cross-cutting horizontal areas here where we've depicted in the black squiggly lines. And why those are significant is that those are called, those are mag lows within mag highs. And what we think has happened there is that the fluids that typically carry the mineralization, in this case the silver and the cobalt, have crossed through these this vertical mag high, and it leached out the iron there, meaning it took out the iron as it passed through it, and it deposited the silver and the cobalt in effect in its place. And so these become really prospective areas. And so obviously, you know, geophysics is all about narrowing the haystack so that you can point your drills in an efficient way and not blow your brains out on big drill budgets. So we think we've identified a real trend here and something significant. Why do we think that? Well, if you look here where the arrow is, this mag low here right in the middle and where the black oval is, that's where all the mineralization of the D zone is. That's where the ramp is, where you can see we've drawn it on there right by the arrow. This is the ramp that goes down. And this is the area here that was mined. Incredibly high grade silver, incredibly high grade cobalt right in here. And then you've got another, you know, you've got another shaft right along here and so on and so forth. So we think we see a pattern that was not available to us in the past. And we've identified, you know, particular areas here. I mean, look at the mag low, you know, coming up on the northern part here relative to what's going on across cutting this diabase dike here. Same thing down here. These are all new targets that have never been drilled. Because we just haven't been able to see the detail that we've now seen on this magnetic survey. So this is really quite exciting because we know the potential that exists on the D zone because it's been mined, it's been drilled recently, mind-blowing intersections, quite literally. So if that same sort of potential exists on, you know, all these cross-cutting horizontal mag lows within a mag high, that becomes very interesting. And so that's where you're going to see us focus our attention on developing this resource on the Man Mine. You know, the Truth Machine will tell all, but this is a quite interesting development, and I don't think the market picked up on it, but hopefully that's clear to all who are watching now. This is just another part. So not only did we do mag, we did a photo, and this is a mosaic. And so it's a series of photos that were patched together by the computer. It's a super high res situation. You can zoom in and see incredible detail on this thing. This is obviously a wider angle, a zoom out. But what this does is helps us identify the infrastructure that's already on place in this man mine. So this is a snapshot of the D zone area where the ramp is. You can see 5 shafts going into the area. And what's in gray here is where the tailings facilities are, or I should say, excuse me, more like the stockpile. So a lot of this stuff was brought to the surface and left there. And particularly what's interesting, I mean, we were trying to identify the cobalt that was left over because oftentimes, you know, these old timers would take the high grade silver. It's easy to identify visually, and they'd leave the cobalt because it didn't have a lot of value. So what we were actually quite pleasantly surprised to, we were expecting cobalt, and we got, you know, a grab sample up there over 5.7% cobalt. That is really substantial, but we also got a couple of grab samples of really high grade silver. We see 10,000 grams per ton silver along with over 1% cobalt. And the reason why it's 10,000 goes off the chart. So that grab sample is off the charts. I remind everybody these are grab samples, and geologists tend not to pick up the ugly rocks. So, you know, everybody be aware of that. But what this clearly states is there's a lot of mineralization left on surface, and obviously this mineralization comes from depth, and you know, for good reason. This was a mine with lots of work done on. So there's I'll emphasize that we're not looking to, you know, reprocess our stockpiles. You know, that's sort of short-term thinking in my mind. What we really want to do here is extend the mineralization at depth, certainly on the D zone because we can get down there with the ramp, shaft 5 right there and the ramp, that's where the D zone is. We see the mineralization very clearly. If you go on our website, you can see it in a 3D model. It extends at depth. It just needs some more drill holes to define that. We could then go underground quite easily and dewater this thing. And then, of course, there's the mag lows within the mag high situations. Potentially, this sort of situation, this whole D zone situation could repeat itself multiple times along that vertically oriented mag high structure that we saw on the previous slide right here. So if we could repeat the D zone multiple times, then you become a real situation there. So we're kind of excited about what happened as a result of magnetics, which is a pretty straightforward geophysics. So what's next for ore finders, or Power Ore, excuse me? Well, obviously, we're going to be developing the Man Mine. We like that project. We like the fact you can drive right to it. And we're going to be applying for our drill permits. We're in that process right now, and then you can expect to see us do obviously some drill results, because that's the only thing that matters in this business, in my opinion. And outside of what we're going to be doing on Man, we've always said from the very beginning, Power Ore is going to be exposed to the electrification metals. We define that as copper, nickel, and cobalt. Nickel and copper, nickel and cobalt obviously are directly exposed to the electric vehicles, batteries, inputs. We expect that market not only to grow, but grow substantially in a very, very big way. And those are the two key components for the batteries. And then copper, well, copper doesn't go into the batteries. Copper connects point A to point B in all these vehicles, and you need 2 to 3 times more copper in an electrical vehicle than you do in a regular vehicle. So copper is really a big electrification metal. So we love copper, we love nickel, and Power Ore is designed to acquire advanced stage assets that gaining direct exposure to these commodities in Quebec and Ontario. And I won't say much more than that, other than to say you will see us make some fairly substantial moves in the not too distant future. So please stay tuned for that. So it's exciting times, and I encourage everybody to look us up, do your own due diligence. We've posted as much information as we can on our website, including 3D geological models, interpretations, exploration plans, drill programs, etc. Please feel free to reach out to me. My email and telephone numbers are on the screen. Our symbol is PORE. We're traded on the Toronto Stock Exchange. We're fairly well capitalized for what we're trying to do right now, and we really do think there's a strong value proposition for Power Ore as it stands, for the asset that it owns right now, which is very interesting, and for what our plans are for the future. So that's it for now. We thank you for your time, and look forward to speaking to anybody